cars, bicycles, rental accommodations, umbrellas, basketballs. These are the few but leading innovative ideas that is taking China by storm in the booming sharing economy. In 2016, China's domestic trading volume in the sector reached more than $500 billion. On top, around 600 million people took part in various activities related to the sharing economy. The State Information Center of China added that by 2020, the sector's growth will account for 10% of total domestic GDP. But what is fueling the skyrocketing numbers?
New digital tools, software, GPS, smartphones, especially smartphones, are enabling things to happen that just were too difficult. Suddenly you can rent someone's apartment, very easy to do now. Suddenly you can have your own apartment rented, very easy to do now. All of this is becoming possible. That's generally what people call the sharing economy.
GPS, software and smartphones are leading the revolution, but none more so than China's mobile payment sector. And Didi Chuxing, China's biggest ride-sharing company, is one of the beneficiaries.
It gives our riders a seamless experience of mobility. When you want to share a ride with somebody to the end of the journey, you don't have to touch on any cash. Use your smartphone and it's just a few clicks and everywhere is on your fingertip. Didi is now the world's largest one-stop transportation platform. We serve 400 million people. It gives people a perspective and makes people to realize, to understand the great potentials the sharing economy can give.
The Chinese market more than tripled to $5.5 trillion in 2016. That's according to iResearch in China, compared to the United States, while mobile payments grew 39% to $112 billion, global firm Forrester Research has said. Earlier this year, bike-sharing companies Ofo and Mobike raised more than $500 million each from Alibaba and Tencent. And Dr. Zhang Ke from Tsinghua University says that tech companies are investing to help address deficiencies in the sector.
Because the sharing economy basically is the access economy. So the company want to improve the efficiency between supply and demand. The previously model called C2C or P2P is not efficient at all. So in that way, company want to provide as much as possible about the services, access service for the customer. So that's why they invest so much on this new sharing goods.
Businesses and investments, the digitalization and the country's 1.4 billion people are all playing significant roles in making sharing economy a phenom in China and across the world. On today's show, we've invited two of the professors to discuss in more detail the boom behind China's sharing economy. Hello and welcome to this month's edition of China Watch. We're pleased to welcome back Dr. Zhang Ke from Tsinghua University, and alongside him today is Jeffrey Towson, who's a professor of investment from Peking University. Welcome to the show.
Thank you. Not to be here again.
So we'll start with the China sharing economy, the characteristics. How does it compare to the sharing economy in the United States or Europe? What's your take on this?
I think you can say two things. There's definite advantages that are very, very big here in China, and there's definite challenges or problems that are also bigger here. On the advantages side, huge number of consumers, all on their mobile phones, all using mobile payment. So that there's a lot of momentum here that's much bigger than anywhere in the world. The challenges are a lot of the problems these services are addressing are larger here. Transportation congestion is a much bigger problem in, say, Beijing than New York. So you could call that an opportunity or a challenge, but they're addressing bigger problems here.
I quite agree with these comments because it's a bigger traffic jam in Beijing, so we need to some service to solve this problem. So the sharing economy like Didi and Mobike just address this problem. So my view on sharing economy is to hugely reduce the access cost. So Mobike or Didi, they just address this. So sharing economy, to my view, I want to make this statement is it's not about sharing, it's about efficiency. It's about reduce the access cost. So that's the key about the sharing economy.
And you know, the bottom line for all of that is what was mentioned was efficiency, efficiency, efficiency from the economy side. Everything's more efficient. From the consumer side, it's actually different. Consumers don't see efficiency. What consumers see is dramatically increased convenience.
Isn't it just a rental economy rather than why is it called sharing economy? Where in fact it is a rental economy or it's an access economy?
I didn't say this is a rental economy, because when we talk about rental economy, it's talking about your budget limited. You didn't have enough money to buy something, so you rent it. But when we talk about sharing economy, it's talking about how you can get access to a service, to the company provided access to service. It's no matter new resources or idle resources. But why people always mention why the offer didn't was not a sharing economy, because we misunderstand something. Because we always use Uber to define the sharing economy. Because at the early stage, Uber used C2C, customer-to-customer sharing. Let me tell you the truth. At the very early stage, Uber already adopted some small firms, small car rental firms on their platform to meet the huge demand. Otherwise, if only rely on customer, it's now not enough to provide enough service for the customer.
So businesses have to come into the sector to play a big role.
Yeah, we have.
Most of what we're talking about are things that we would call access businesses. You access a car for a while, you access a bike for a while. That's different than buying a bike or for me selling a bike. Now, what I would look at China, what I think is happening is basically digital transformation. Certain digital tools have emerged, software, GPS, mobile payments, smartphones, and they are just dramatically disrupting access businesses. There have always been bicycle rental companies here. That's not new. What's new is the software made it so you could do it dramatically more conveniently. So I kind of see this as like when I look at Uber, whether they're buying the cars themselves or partnering with rental companies or using users' cars, what strikes me is that they're basically taking the level of convenience in this access business and ratcheting it upward because they have tech tools nobody had before.
So
that's kind of how I think it. I think about like digital disruptors of access businesses versus more traditional.
So I think we've established that the businesses are playing a big role, investment companies also. So if we move on to that side of in the sharing economy, so for example this year, Tujia, which is the home rental sharing company, they received $300 million in investment. Also, in addition to that, we've seen Mobike and Ofo receive $500 million each from investors. So my question is, why are these investment companies willing to invest so much money in these companies? Are they actually making a profit?
I think we worry too much, because the venture capital companies are very smart. When they understand the business model, they will invest. They're not stupid on this. So
what's their ultimate goal?
For example, for the offer, when I have an in-depth study on their business model, I think they have four aspects they can get the money back. Firstly, they have a deposit, so they can generate some interest. Second, about the daily operation, because you can say every day each bike can be ride by 4 times or 6 times. So every year it's around more than 1,000. That's definitely cover the cost. The third about data value, because they all store the customer last mile activity data. That's very valuable. The fourth about ecosystem value, because you can see in the Mobike and offer, you can get a lot of voucher from different stakeholders. So they will share this revenue as well.
With these investments, so much investments, is there a danger of a bubble being created, or is it already a bubble waiting to burst?
There's different types of bubbles. If you're talking about a credit bubble, which is what most people often, that's the one that's big trouble, right? Okay, this is not that. Okay. Yeah, there's a lot of money going into this. I think one thing that is different that's worth noting is if you were to look at venture capital money in the US, or who's funding startups in the US, you would see a pie chart with lots of venture capital. When you look at that same chart for China, what you see is a lot of venture capitalists, but then 3 big companies supplying, I think, well over the majority of money now, which is Alibaba, Baidu, and Tencent. Now, they're not investing with the same approach that a venture capitalist would invest. It's not about the return. They have other issues. And that's, I think, something different about China, is this amazing dominance of 3 companies in terms of funding this ecosystem.
Yes.
Now they have different interests. As to whether it's a bubble, I think people are going to make money, I think people are going to lose money. But I think that's what venture capitalists do.
So in terms of the businesses, the actual businesses in the sharing economy, what is their profit model? Are they actually making any profit? So companies like Mobike and Ofo, how are they making profit?
When I go to Ofo and talk with his co-founder, and I give a number to calculate how they are profitable. For example, if the bike each day they give a ride for 6 times, so 6 RMB, then per year it will be 2,000. So for the cost of producing a bike or maintenance the bike is about 1,000 RMB. So there will be another 1,000 profit left. So you have about 10 million bikes. So it will be about 1 billion RMB. But when I give a number about 1 billion, the co-founder smiled at the number and said, we have more of that.
Let's say these 2 companies, between them they probably deployed about 13 million bikes in the last year that they've put, mostly in China, but also internationally now. They're not thinking about profits right now. They're thinking about market share, getting the data, building out their systems, building their companies. And it's a little bit of a money war. They're going for market share, which is not uncommon in internet companies. Right? Google didn't think about how it was going to make money for several years until it figured that part out.
Another thing I want to highlight is about this is not a service company. It is a financial company because they financialize the service. Every day you can see very stable cash flow coming. So in that way, the venture capital will say these are very good assets, financial assets. So of course they can attract more investment. So actually they on left hand they run big data. They monitor the bikes where they're going and they just do this operation. But right hand they just play the financial games. So attract more investment and generate a very stable cash flow. So I think they are not a bicycle company. They are big data company plus financial company. That's my point.
Yeah. So in looking forward to the future, so our businesses in the sharing economy, what are the key factors in sustaining them for the long term? So sustaining a business in sharing economy for the long term.
I mean, I always ask myself 3 questions: the consumer piece, the competition piece, and the role of the government. Those are my 3 factors. I like to have
China
clarity.
specific, isn't it? Because the role of the government it's a major.
Right, and let's say we're looking at bike sharing. Okay, the consumer picture is about as good as you will ever see. I mean, it's an unbelievable phenomenon. I haven't ridden a bike since I'm a kid. Now I ride every day. Like, it's crazy. The competition side was fierce, but now it's settling. Couple winners. The government side's the question. And if we were talking a year ago about, Didi versus Uber, okay, Uber merged, everyone thought that was the end, and then the government stepped in with regulations that I think were much more serious than anyone thought were coming, or at least I didn't see them coming. Restricting who can be the drivers. I think that really was a bit of a surprise. So this is a bit of a question mark here. Maybe it will be minimal, public safety, maybe it will be bigger. I mean, I don't have a lot of insight into that world. I think you probably have far better than me. Yeah. That's the question mark, I think, now.
Yeah. I mean, moving forward, I mean, so, I think regulation, as you've mentioned, I think will play a bigger role because of the government. So, in the sharing economy going forward, how important is regulating the sector?
Previously, we were always regulating the company and how they provide, what's their quality of service. But right now, we have to also regulate the customer. Because when in our research, we also have some view of point about co-creation of value, both in supply side and also customer side. Because when the customer use the Mobike or offer, they actually provided the service to the next customer. So in that way, the production and the consumption are mixed. So actually, they are also like a producer. So in that way, we also have to regulate the customer. So we have to make the customers behave properly to keep the things clean, to keep the bike work, and to keep the bike in the right place. So in the future for regulating, not only regulating the companies,
businesses,
but
but
also the customer.
across the board.
Yes.
So after what we were saying in the interview the other day, so at the moment the big thing is transportation. You know, so we talked about the example of OFO and Mobike. What's after transportation? What's the next best thing? Is healthcare the next thing after transportation?
I think it's just all digital disruption or transformation of various businesses, and I think transportation's one. I think new retail is another one. Yeah, I would probably put on that list finance and insurance would be my number 3, because it's inherently an information business. But yeah, you can pretty much go sector by sector, and you'll find something.
But we have some conclusion on this, because if in these specific sectors, if we can hugely reduce the access cost, and this industry is not efficient, and in this industry we have a very high in demand, so in this kind of condition, that can be shared. So the key is access, how to easily access to this service. So that could be shared.
So I think for the time being we have to focus on transportation in China, and then we'll see what happens with the other sectors, I think.
Yes.
Whether experts say it's a rental economy or an access economy, there has been a lot of success stories, and that's been down to improving convenience and efficiency, and there is more to come. This is China Watch. Thank you for watching.